Investing in dividend stocks is a proven way to build wealth over the long term. These stocks offer not only capital appreciation, but also a steady stream of income through regular dividends. However, not all dividend stocks are created equal. Some are better than others in terms of their dividend yield and growth potential. Here is all about dividend stocks that will make you rich. Number 10. Apple. In the year 2012, Apple, which is a worldwide technological business, started handing out dividends to its shareholders. Currently, it has a dividend yield of around 1.5% of what it has earned. The strength of the company's brand, in addition to the dedication of its customer base, has been a driving force behind the expansion of the business's revenue. In addition, Apple has a sizable cash reserve that it has the ability to deploy toward the completion of upcoming acquisitions or the distribution of additional cash to shareholders. Both of these options are open to the corporation. Number 9. Realty Income. Realty Income is a real estate investment trust that owns and operates a portfolio of commercial buildings. The assets are located in a variety of different markets. It utilizes a one-of-a-kind business strategy in which it grants long-term leases on its real estate to tenants in exchange for a consistent flow of rental income, and as a result, it enjoys a healthy cash flow. Realty Income has maintained a dividend payment schedule for more than half a century and presently offers a dividend yield of approximately 4.5%. Number 8. Target. By achieving some of the highest operating and gross margins in the retail industry, Target has demonstrated greater profitability than its competitors. Sales have continued to grow at a healthy rate as a result of the company's focus on growing its e-commerce business and expanding its in-store offerings. However, 2022 was a terrible year for Target investors because of the clash between very high expectations and the difficult realities of retailing, which sent the company's shares down more than 36% through early December. Despite having a difficult year, Target continues to be one of the best managed retailers and a consistently profitable business. Target should be on dividend investors' shopping lists because of its 50-year history of dividend growth and shares current steep discount to historical highs. Number 7. Microsoft. Microsoft, which is one of the largest companies in the world, has consistently increased its sales, and the fact that it places a strong emphasis on recurring revenue sources, such as subscription-based revenue, is an especially appealing feature for dividend investors. The firm's balance sheet is strong, indicating that it has more cash than debt, and its payout ratio is very low, indicating that there is a lot of room for the dividend to be increased. It is not surprising that Microsoft could become a dividend aristocrat, given that the company has increased its dividend payment every year for the past 12 years in a row. Number 6. Exxon Mobil. Exxon Mobil is a multinational energy corporation that focuses on the exploration, production, and distribution of crude oil and natural gas. The company enjoys a strong brand recognition among its peers in the energy sector and is considered to be one of the largest energy companies in the world. In addition, Exxon Mobil is a dividend aristocrat because the company has managed to raise its dividend payment for the past 38 years in a row. The dividend yield for Exxon Mobil as of right now is 5.13%. Because the firm maintains a solid balance sheet and generates a significant amount of free cash flow, it is an excellent investment option for investors who are looking to increase their income. Number 5. Clearway Energy. Although most people think of renewable energy as a place for growth investors, there is also a fantastic opportunity for dividend investors in this space. An excellent illustration of this would be Clearway Energy, which owns and operates wind and solar assets on a utility scale. The company invests in, acquires, and operates renewable energy facilities, and then sells the power generated under long-term contracts to utility companies. These contracts span decades, not just years. The dividend yield has been consistently higher than 4.5% over the course of the previous couple of years, and the payout has increased by an incredible 87% since 2019. Clearway Energy is an excellent option to consider if you are looking for a less risky and more stable method of profiting from renewable sources of energy. Number 4. Walgreens Boots Alliance. Walgreens, which is one of the largest retail pharmacy operators in the world, is seeing the fruits of its efforts to turn around the company. The business has successfully reduced its costs by billions of dollars, and its efforts to become a more integrated healthcare provider are beginning to bear fruit. When you consider everything, it becomes clear that this already successful business has the potential to become even more successful. The long-term goal that the management has set for the company's healthcare business in the United States was recently increased. Walgreens stock has a lot to offer dividend investors and value investors due to the fact that its dividend yield is higher than 5%, and that it has increased its payouts annually for the past 47 years in a row. Number 3. Brookfield Infrastructure. There are times when the best stocks are the ones that are not readily apparent to investors. This is the situation with Brookfield Infrastructure, which is a global owner of water, energy, utility, transportation, and communications infrastructure. Its assets generate consistent cash flows that are resistant to both recession and inflation, and Brookfield returns a sizable portion of those cash flows to shareholders. Brookfield Infrastructure is a hidden dividend gem that has delivered almost 900% in total returns since it went public in 2008. With a dividend yield near 3% at recent prices for the C shares and over 4% for the limited partner units, and a goal to raise the payout 5% to 9% every year, the company has delivered almost 900% in total returns since it went public in 2008. Since it went public in 1961, the company has increased its dividend payment annually, and over the course of the last decade alone, it has increased its payout by a staggering 556%. Don't worry if you're an investor concerned about the housing market crash that started in the second half of 2022. When there is a limited supply of homes on the market and it is more difficult to acquire one, homeowners are more likely to make improvements to the home they already own. An additional significant fact that works in Lowe's favor is that the average age of a home in the United States ranges from 31 to 60 years, depending on the state. Both home improvement contractors and the next generation of do-it-yourselfers will spend a lot of money at Lowe's. Sales are increasing because professionals are now given priority. Number 1. Chevron. The price of oil has increased. Since the coronavirus pandemic, the energy sector has been one of the most successful, and Chevron has been a big winner for investors. Oil stocks have roared back to the forefront over the past few years, and investors have been especially successful with Chevron. If we are to be completely objective, however, Chevron has proven to be a stock that is quite beneficial to own, particularly for those who are dividend investors. Chevron has been distributing dividends to shareholders for more than a century, and the company's dividend yield stands at 5.13% right now. The company has a significant presence in the United States, where its assets include exploration and production facilities, refineries, and pipelines. Although the price of the stock is subject to significant swings due to the ups and downs of the price of oil, holding Chevron shares has historically been profitable for investors who seek dividends over the company's entire historical track record. Investing in dividend stocks can be a smart way to generate passive income and build wealth over time. The stocks listed above are all solid investment choices for income-seeking investors, as they offer strong balance sheets, diversified product portfolios, and long histories of increasing dividends. However, it's important to do your own research and analysis before making any investment decisions. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.